Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter like we normally do, see what people are sharing on social media in relationship to wealth building, financial topics, and or commodities. I'm going to interject and sprinkle in my financial opinions as we go, and we'll dive right in here. So let's take a look. If you want to follow me at Finance Square Finance, and if you want to join our community, finding-value.com, that's where I dive deeper into these topics, individual companies, sectors, all of those things. And we still have a discount going on. LEAP, LEAP is the coupon code. So B of A, global wave implies pullbacks are buying opportunities. So what is this global wave? I didn't actually understand what the global wave necessarily is, but the global wave has improved for 4 consecutive months after signaling a trough in the global cycle in January. So when I look at this, we can see there was a big real estate bust in 1990. That was the bottom, basically, of the global wave. We had another bottom in about '01, where '01, '02 it turned an upturn. We had another upturn, a big pullback in the global wave, so to speak, in '08 and pulled up in '09. Right now, we are pulling back up. So we had a slowdown from about 2021, 22, all the way till recently of January of 2024. We've been pulling back up in this global wave. The waves, when they pull up, looks like they move up pretty good in these cycles. So I don't think we get a false global wave reversal. So I think it will continue to the upside. And I don't know exactly what global wave is, but I'm just looking at it as an oscillator of some sort. And it's strengthening at this time. Bank of America's quantitative strategy is the one that came up with this global wave. The Sprott Nickel Miners ETF, just an observation. We've got a downtrend line that's broken. Everyone knows that follows the daily updates that nickel's bottomed. At least that's my opinion. And then you can see that the nickel miners are coming up and breaking their downtrend line. This is a perfect spot to be looking. Look at the volume increase here too. And we've been looking at some of the potential miners, nickel and diversified miners is what I'll call it, on the website. And you guys know which one I like in nickel. That's a diversified mining company that pays a big dividend. You guys know which one I'm talking about. Scrolling down, looking forward to the stock bust and silver boom. So this is silver divided by NASDAQ. Looks to me like a double bottom. The last time it bottomed was in the year 2000. And we are coming on up in the year 2024 potentially. Now, some people have asked me, where do I think we're at in this cycle? I think we're early. I think we're in like 2000, 2001 area. So 2024, in my opinion, is similar to like an early 2000 timeframe, based off of a lot of different ratios, based off where we're at in the real estate cycle and expansion phase, based off of where technology stocks are trading and the behavior that we're seeing in technology stocks and in all of the ratios when compared to technology stocks. So it makes me think that we're very early 2000s for a relatable comparison in people's lifetime. Silver miners are outperforming gold miners is one of many characteristics of a powerful bull move in precious metals. I think it is time again for an epic move. These opportunities are very rare, so make the most of it. Most play the market with their emotions. They react to everything. Plus, they have no strategy or trading rules. They do the same thing over and over without changing. To succeed in trading, it is vital not to participate in this emotional roller coaster, but to make use of it instead. When a bull resumes, it is vital to change mindset. One cannot play a bull with a bearish mindset. We've talked about this one before. So looking at this SILJ versus GDX chart, Let me shrink it in there. There we go. You can see we've got a false breakout to the downside, slingshot cheetah upward. That was 2016. I actually rode the 2016 bull market back then. And I had a couple of stocks that I rode that with. They're actually in the portfolio again for this 2024 move. And I made a boatload of money really quick in 2016 off that move. They all had falling wedges into a tip at the bottom of 2016. There was a lot of diversified mining companies too that were bottoming in 2016. We had obviously a huge move in 2020 from all that money printing stimulus. And we also have a potential low here that's ready to break to the upside again in 2024. So I know some people, they're probably worried when they watch gold go down or silver go down as much as it did yesterday. But everything's still intact, guys. That's not going to stop necessarily the move to the upside with a large single down day. Some people get afraid of that. Bigger picture view, things are still in check. Here's Lance. He says, the recent correction is occurring as financial conditions are tightening. So what he's got here is in Bloomberg US financial conditions, he's got the index tightening, so tighter financial conditions on this chart. Now, my question is, and I don't know what the global wave really is, but we've got tighter financial conditions for this Bloomberg chart. And then we've got a strengthening global wave. So how that offsets each other, I'm not exactly sure. But there are some metrics that I don't normally track that I'm looking at through, obviously, social media here. Coming on down to Rashad, he says, silver's down more than 5% in a day, slicing through the 38% and 50% Fibonacci support levels. Next Fibonacci support comes at 61%, which is $25.40 level. So maybe that's a good spot to be looking, is $25.40 if you want to add to a potential silver position, is that fib level of 61.8%. Time spreads remain ultra resilient, but crack spreads are still falling. Crack spreads are for gasoline prices. It's the refining spread. Oil will pull back, but it will be shallow in this person's opinion. WTI to find a bottom around 80, and that's where we've got a lot of support. I don't really try to make short-term price predictions. I usually just say this is where support's at, and hopefully we can get support in that general area. That's the way that I look at things. Here's gold. We've got all these people trying to make price predictions here of what a potential pullback could be. He's got ABC. He is apparently hedged. So now it's just a timing issue. So is it A, B, or C? I don't really view the markets like this. I mean, I use technical analysis to gain an entry point, and I'm not too huge on the Fibonacci retracements. I mean, you can look at it. Yeah, it's at 0.618. I've seen 0.618 fail a bunch. I've seen 0.38 fail a bunch. So I'm not like a diehard Fibonacci retracement guy. I'm not a diehard Fibonacci extension guy either. We can use it and look at it, but it's just kind of extra information. I'm really diehard on maybe stage analysis because you can see the bigger picture view and get a really good entry point low. I also like the big bottoming patterns and the falling wedges and stuff like that. So I'm not as big on the like fib retracement extensions. I know they exist, and I think I agree that they probably bottom in some of those areas. But I like the big picture view and trying to get in at a really good time that's low. And I've got an example later on that someone is sharing of an ideal entry point. And that's really what I use, because if you can get in that early in those entry points, that's where you make all the money. These short-term market fib retracement stuff and saying this guy's hedged, I just think that's kind of ridiculous. It's too short-term for me. you don't make enough money to make it worthwhile, in my opinion. So I take the big picture view. I go for like, the 5, 10, 20, 30 times my money. And I try to buy really early and just hold on. That's what I've found to be the most successful, for me at least. And I would say that's probably the most successful for other people, even if they don't know it yet. The people that are trying to get these little market moves, yeah, good luck. You're not going to make much money, in my opinion. The lower 48 gas production remains weak. So while LNG feed gas has rebounded, the implied deficit is back in natural gas. So here's the LNG gas exports bouncing higher. But at the same time, we can see our lower 48 production continues to decline or remain at lower levels. This will eventually work off the inventory that we've built, but it's going to take some time still. We've got a lot of inventory. Pomp says, we are interviewing candidates for an open role. Most candidates keep asking to work from home for 1 to 2 days a week. Talked to a candidate over the weekend. She wants to be in office every day, said it is conducive to learning and growing. Guess who is the lead candidate now? I just find this highly, like, how do you know how good or bad some of these candidates are? Just because someone wants to show up to the office does not make someone good or bad, in my opinion. So I think just because someone shows up every single day, I mean, it could be a good thing, but it doesn't necessarily mean it is good. It could be one indicator. If someone wanted to work from home, like a half day Friday, or not even work from home, they just do a half day Friday. I'll just make my point. I have had many people work for me, a lot, and there's a couple of things that you can't really train. And that's what's difficult to find is you can't really train in motivation, and you can't really train in some of the skills. Some people can do it. Other people are just, they've got better eye-hand coordination. They can hit points, whether you're drilling something or whatever, they can do it in a way that looks effortless, and they can hit targets, and they can drill perpendicular to really weird shapes, or circular shapes. Some people can never do that. They just can't physically do it. So if I've had people come in late, 15 minutes late here and there, and they're such good workers that I'm like, screw it. I don't want to be a hard, someone who's really hard on them, because I want to keep that talent. I want to keep them. And if they do really good work, I mean, that's really what matters at the end of the day. This here doesn't seem like it's that huge of a deal. So, I mean, that's just me. Maybe I'm different. I'm not a clock watcher. In fact, I get very impressed by people who do very good work in very short periods of time. That's the most, if you want to impress me, you can do something very efficiently with very good quality, and I will get very impressed. This whole thing that he's evaluating it by, it's all BS, in my opinion. Here's Alexander. He says, what are some signs a person is high IQ? What are some hard to fake signs where you can look at someone and say, probably a member of a group that is higher IQ than average? I think you can figure that out by talking to people, how fast they can respond to you, if they're quick witted and really can just flow in a conversation back and forth without stumbling all that much. That is one way to kind of figure out if they're higher IQ. They can handle difficult problems on their feet very quickly. So that's kind of like you can go back and forth with someone. They're quick witted. They get on top of things, and then you can hit them with a really difficult topic, and they can just take it in stride like it's nothing. I think that generally indicates higher IQ. Another thing is they don't ask really obvious, stupid questions. That's another thing that's kind of high IQ. And I'll give you one example. Let's say that person A parks their car in a single spot outside, and it's always in that spot. And then when they come and walk in, that car is not in that spot for that particular day. And let's say person A always comes in before person B, and person B says, okay, most likely person A is not here because that car is not in that normal spot. I would say if they can do things like that very quickly, that's higher IQ than lower IQ. Lower IQ is like they don't notice anything. They're completely oblivious to everything. They can't figure out basic things. That's definitely lower IQ. And real high IQ, basically, they can do things off the top of their head. They can compile lots of information very quickly. Big number times big number plus this. They can look deep too, past just first order problems. They can go to tertiary problems quickly. So they can identify patterns and all that stuff very quickly. Pay attention to the copper price right now. A 20-year breakout could unfold in the coming months as copper is within 10% of its all-time highs. Yeah, it looks like it's breaking higher, guys, and this is a nice support resistance line that we're playing with. So I think it looks fantastic here. I think it looks really good. Another one from Katusa, he says, how fast things change. Outlook for Fed rate cuts has shifted dramatically this year. Hikes or zero rate cuts now seen as more likely than three or more cuts. This is the option implied probability of three or more rate cuts in 2024. And, I've seen a lot of people on Twitter, they use these types of things to make predictions about the future. And what I do is I don't really look at the probability of this and the rate cuts. I just look at the charts and I look at all of the different charts, like a whole bunch that I look at. Maybe it's like a 40, 50, 100, whatever it is. And then I draw conclusions from all those charts and all that data. These other guys, they kind of look at like, what's the probability? That's all garbage, guys. It is. These guys don't know necessarily what they're doing, and they're just putting bets on stuff. But you can see money flows where the rubber meets the road, is where I'll call it, is where money gets piled into certain investments. And that's what I like seeing. That's what the chart patterns are telling us. There's money coming into this stock. That is a vote for what they think the future will be with money, which is the strongest piece of evidence. Gold price performance over a couple of different time frames. Today we were down big. I think it ended up at $70 down. But 30 days up, 6 months up, 1 year, 5 year, 20 years, everything's up, 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 up. So longer term, guys, we're still good. Just be patient. Here's Luke Mick, however you say his last name. He says, the biggest scam we've ever fell for was believing we needed a central bank to lower volatility in the financial markets. Look at how volatile markets have become since 1913. You cannot remove volatility from life or financial markets. You can only delay it. And this is the gold standard versus the fiat capital world, 1913. And then you can see the boom bust cycles that they are creating. And this was the natural boom bust cycle, which was much smaller, short lived for both the boom and the bust from 1800 all the way to 1913. So this is a really old chart. I've seen this one since the mid 2000s, I think. But here's that chart I was talking about, the ideal buy point. So it says at the stage 2 investor ideal buy point, you're not going to see YouTube commercials hyping something. So most everybody does not hype what is here. It's still coming out of a stage 1 base. The most realistic thing that you'll hear from most people is, oh, that hasn't moved up in like a decade. So it's, this is like 2008 all the way down to a double bottom. And I'm over here buying in this whole area on the right-hand side over here, depending on what it is. So I'm buying stage 2 completely. Totally agree. And that's a lot of the stuff that I try to implement on the website and give you guys buy points, is all of this A and B location. Lots of A and B location here for the ideal buy for the investor. This is Rick Rule. He says, what people want is certainty, but sadly, certainty isn't an offer. What's on offer is a range of probabilities. And in my view, the range of probabilities points to not merely higher, but much higher gold prices. Yes, agree. You can't, you're never going to get to certainty. It will always be a range of probabilities. Totally agree with that. So here's Jesse. He says, precious metals are correcting a bit today, which is to be expected after such a sharp rally. What I find notable is the lack of volume in both futures and spot trading behind the sell off, which is further reason to believe that is likely to be short lived. And this is the short little volume that we've got on this big sell off that we recently underwent. So just be patient, guys. There wasn't a lot of volume on this, not a lot of follow through with volume. Volume is generally where you see that change of trend. So I don't think the trend has changed. I think it's just a selling pressure day. Art Berman, true and commonly ignored by neoclassical economists who prefer math over physical reality. High oil prices and high inflation go hand in hand. All periods of high inflation during this period had high oil prices. And that's what I mean by high oil prices translates into high consumer price index. So oil generally goes up and then the consumer price index kind of follows with it. Yes. JC says, is market breadth getting better or worse? To me, it looks like it's getting worse. So these are the New York Stock Exchange percent of stocks greater than 50-day moving average, and they are declining. It is getting worse. Your breadth is shrinking. Here's silver. We got Scotty here. And Scotty does know. Great opportunity for adding coming, in my opinion. 25, 26 is my target. Maybe June is what he has. Now, I don't try to predict. I just let it fall where the chips may. But I do think 25 to 26 is a pretty good number. That's kind of like our retest move. And here's the chart that he's got going on there. So coming on down, get ready for gold low in July before a strong run up to year end. Take advantage of the correction to load up. It's going to be one of the best opportunities we've seen in decades. And he's talking about gold here. So maybe we've got April, May. Maybe we get a pullback into June, July based off seasonality is what he is saying, where we could then run from somewhere in summer. So that's his opinion. Canadian oil and gas stocks are even cheaper. And what he's got below here is U.S. oil and gas stocks are historically cheap to the broader market. And you can see how cheap they are in relationship to previous bottoms in a lot of these bull markets. It's like buying it in the bottom of 2002, 2005, and that's about it. And we are lower than both of those. So looking backwards to 1995, we are the cheapest we've been on a historical basis for U.S. oil and gas. And I agree, Canadian oil and gas stocks are even cheaper than this. We've got a lot of good deals here, guys. If you take positions in these, be patient for this to come back up. Do not lose your patience here. We are at such great opportunities for so many different sectors. We're off the board cheap for so many different sectors in the commodity sectors. Patience is required, and I think we're going to see absolute stellar returns when we get traction and money rotation into commodities. The Chinese oil reserves are almost 2 times those of the U.S. They obviously need larger reserves as a smaller producer, but why is China stockpiling to this extent? Yeah, probably because some sort of devaluation could occur. Maybe they're going to devalue their own currency. Or maybe they think that they're going to go after the US dollar. I don't know. But usually you stockpile something if you think your own currency is going to buy less of it. Or maybe they need to buy more because they think maybe it's war or something else. Who knows? Or maybe they can't buy US treasuries anymore and they're buying more physical assets. This occurred back in 2000, the early 2000s and mid 2000s. They were stockpiling all these commodities. Lawrence says we must be prepared for what's coming. Power demand coming out of major technology companies has increased 8x in the last 10 years, says JP Morgan. Yeah, we're gonna rip it here for power demand. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We still have the LEAP coupon code if you're interested. 50% off the first month if you want to try it. Goes to regular pricing after. Or you can get a larger discount on the yearly membership if you use it. All right, guys. That's all I've got for today. We'll catch you next time. This is Finding Value.